Today's topic is how to vet a sponsor as a passive investor. So I'm Camilla Jeffs. I'm the CEO and founder of Steady Stream Investments, and I'm excited to share this topic with you. It's a really important topic, and one that when you, as a passive investor, it's really important that you focus on. So first, a little bit about Steady Stream Investments. We help you build wealth by investing passively into group investments so you can have financial peace of mind and leave a legacy for your family. We're all about teaching and educating here at Steady Stream Investments. We want to make sure that you feel comfortable with every investment that you go into and that you understand who you're investing with and what you're going to receive in return. And we think that group investing is a very powerful way to build your portfolio and to build your wealth for your family, and also to create impact in the communities that we build from each of our investments. So today you will learn the role of a real estate sponsor, what makes a good sponsor, and questions to ask when interviewing a sponsor. Now, sponsor can just be another term for the lead real estate investor, right? There's a team. Typically, there's a team of investors who are experienced, and they are the ones who lead the acquisition process. They go find the property, they figure out if it's a good deal or not, they do run financial analyses on it, and then they offer the investment opportunities to you as a passive investor. And so we're going to really dive into their role. So one of my favorite analogies about the real estate sponsor is that they are their best analogies, think of it as an airplane ride, right? So the sponsor is like the pilot. And typically there's what's called a lead sponsor. So there's one, maybe two people who are really driving the project, kind of like project managers for the whole project. So that's like the pilot, right? And so if you think of an airplane ride, there's pilots, there's passengers, there's the flight attendants, mechanics, and all sorts of people who work together to get the plane safely to its destination. So the pilot is the sponsor. The flight attendants and mechanics are, the co-sponsors, the other people on the general sponsorship team, and they're the ones that are helping the pilot to get the plane safely. And then you, as a passive investor, are like the passenger, right? You bought your ticket, you figured out where you wanted to go. And in real estate, you're figuring out, well, where do you want to invest and what's your goals and how do you want to build wealth for your family? And are you focused on cash flow or are you focused on appreciation? And what does that look like? So the sponsors, they're the ones that they're signing on the dotted line for the loan, right? They're involved in the acquisition, the underwriting process, but you as a passive investor, you are not signing on the loan. So you're not liable for the loan, and that doesn't count as debt against you, which is one of the great things about investing passively. So the sponsor is just really the one in charge of the real estate investment. So let's talk about what makes a good sponsor. So one of the things that makes a good sponsor is their experience and some past performance of deals. Really, you want to talk to a sponsor about how many years of experience do you have in real estate, and tell me about some of the deals that you have done. So a good sponsor is someone who has a strong track record. They've already been investing in the market. They've done lots of deals before. They've had deals that have sold, and they have proven themselves as being able to have really great performance, because the sponsor's leading the deal, right? And you have to trust them that they're going to execute all the things on the deal, and doing the research should really give you confidence in their ability to execute. Second thing that makes a good sponsor is their ability to assess risk, right? No investment is free of risk. It's if anybody tells you it's a risk-free investment, you want to run, because there's no investment that's free of risk. There's risk in everything you do, including getting in your car every day, right? You really want your sponsor to be honest with you. So it's important that they let you know kind of the risks up front and how they would handle any emergencies should anything arise. So they need to know what the risks are in the deal, and you can even ask them what those risks are, and they will let you know up front. Third thing makes a good sponsor is that they have a well-defined process. So sponsors who are leading the deal, they need to be very well organized. And unorganized just creates a lot of risk for a deal. So you want a team that is just on top of things. They are organized. They have very good communication from end to end, right? From the financing to renovation, all of that has to go through a well-defined process. So, what else makes a good sponsor? Well, they need to have intimate knowledge of the market. Now, how do you have intimate knowledge of a market? Well, maybe they live there currently. Maybe they lived there in the past. That's where they grew up. Or maybe they have already been investing there for several years. So I'm going to tell you a story. I was talking to a really great lead sponsor the other day, and she works in the Dallas market. And in the Dallas market, she has lived and invested in the Dallas market for years and years and years. And she was telling me that she has a significant advantage over other investors who are trying to enter the Dallas market. Because we all know the Dallas market is a hot market right now, because she can go and look at a specific property and she knows all the things about that property. She knows what happened last year at the Dollar General across the store. She knows all the schools that might be built in the area, about what's happening in the area. And this gives her such a significant advantage that she knows that the price that she can pay for that property, and she can be very competitive and feel a lot of comfort knowing that she knows exactly how that property will perform in the future. So it's super critical that they have really great knowledge of the market. And it's not enough for them to say, oh, yeah, Phoenix is growing, right? Well, what about Phoenix on 19th Street? What's happening there, right? It's the submarkets. It's down right to the street that the property is on. Because we all know, I'm sure you all know, you think of your own hometown, you can think of streets in your hometown that are really great streets and streets in your hometown that you won't want to walk, right? You don't want to walk on. And so it's very different. It's not just a city that makes the deal. Also, sometimes a property can be in we call the path of progress. And the path of progress means that, oh, there are plans that the city has or the government has for improving that specific area of the city. And that can be a huge advantage to future performance. So maybe there are properties that are being built around that eventually will have new tenants that come in. And that really increases the value of any old buildings that are right around. Okay, next thing is open communication. I cannot stress this one enough. If a sponsor is getting annoyed with your questions and avoiding you, you need to avoid them. A really good sponsor will be happy to spend time with you, answer all of your questions, and really look at the way they communicate, right? Are they open? Are they transparent about their experience? Are they okay discussing the advantages and disadvantages? And feel free to ask some really pointed questions about it. Another thing that you could do is you could ask them for an example of an investor communication. So sometimes we do this at Steady Stream Investments, is when we close a deal, we offer to anybody who did not invest in the deal to follow along on the journey. And you can follow along on the journey by receiving the communications that we send out once a month about exactly what's happening with the property. So you could ask a lead sponsor for an example of how they communicate to their investors, and then take time to read through that and figure out, is that enough information for you? Are they being thorough? Are they being transparent? Are they being open? Are they saying, hey, we had a challenge this month, our collections are pretty high, we're struggling to get the collections in, but this is the plan that we're going to work on to get those. And so that's really important too. Also, and finally, what makes a good sponsor is trust, right? You have to trust them, because as a passive investor, you don't get a say in how the deal is run, right? You give over control of the deal. And you have to trust that sponsor to really prioritize your capital. Taking time to build a relationship with a member of the team is really important. Now, remember, we talked about that there's a team, right? There's the lead sponsor who's like the pilot, but then you have the mechanics and flight attendants, etc. So make sure you know at least one member of that team very well. And it's okay if you don't know all the members of the general partnership team, as long as you feel comfortable with at least one of those and you trust that one person on that team, then that will help you to feel better about having a good sponsorship team. Okay, so now I want to go into some questions to ask the sponsors. So, whenever you are thinking about investing in a new real estate syndication, and remember, syndication's fancy word for group investment, here are some of the top questions, top 12 questions that I think that you should ask a sponsor. So number one is, why did you choose this market? We talked about this a little bit already. And then number two goes along with that. How long have you been in this market? So a sponsor should be able to accurately depict why they chose the market and what's the information that they used to determine where they are going to invest. For example, if a sponsor is in the Phoenix market, then they could say things like, well, the population growth has been huge over the last 3 years. And they could even probably pull out the exact data, right? The job growth, the job diversification has been just stellar in this market. And so choosing this market was important for us. How long have you been in the market is a great question to ask. So you can understand, is this a new market for the investor? Because if it's a brand new market for the investor, it's going to be a little bit more risky for you as a passive investor. Now, maybe you're comfortable with that risk because it's where you grew up, right? Maybe you grew up in that market and you grew up in Greenville, South Carolina, and you know that things are happening in Greenville. But if you are a passive investor and you don't know the market, and the lead sponsor or the sponsorship team is new to the market, just know that that's extra risk for you because they don't have intimate knowledge of the market. Okay, number three is, ask them, what do you like about the deal? And every sponsor is going to have a really great answer to this, and they're going to tell you all the things that they like about the deal. But then you hit them with number four. What don't you like about the deal? And this one, a good sponsor will be able to tell you, well, here's some of the things that I don't like about the deal. And they will have some details in there, and they'll be open and honest and transparent with you. If any of them say, oh, I like everything about it, then they're looking at it with rose-colored glasses. And so you really want to dig into that. Okay, number five, how many deals have you managed like this one? So chances are that the sponsor team that you're talking to has already managed several deals like this one. But if it's new to them, then you want to understand that you as a passive investor, that's a little bit more risky for you as well. But maybe a sponsorship team has had a lot of great experience in self-storage, and now they're pivoting to get their first multifamily deal. So often there's crossover in the management of those deals, but you really want to understand how many deals they've managed that are just like the one that they're offering right there. Because the more that they've managed like that, the more comfortable you can feel with the sponsor team. Okay, number six, what are the biggest risks of investing in this deal? And you want to know the deal specifically, like what are the risks? And chances are some of the risks could include, well, we don't quite get the rent that we think we can get, right? Maybe it's a value add deal where they're going to go in and renovate the units, and they're going to increase the rent. Well, they have projected that they're going to increase it by $100. Well, maybe one of the risks is we can't actually increase the rent. And so we did all that renovations and now we can't increase the rent. So you do want to dive into what the biggest risks are and ask the sponsorship team directly about that. Okay, number seven, how are investors kept up with the progress? Again, this is all about that investor communication. And I mentioned before that you can ask them for a sample investor communication. And you want to know, well, how often will I hear from you as a sponsorship team? Will it be, will I hear from you every month, every quarter, once a year, and where are you comfortable as a passive investor in hearing from the sponsorship team? For me personally, I prefer monthly communications. I'd like to know what's going on every month and just get a simple email, and then I can just read up on the property and know what's happening with it. Okay, number eight, what is the business plan? And business plans can range anywhere from, the classic renovating units and increasing rent to Actually, it's been mismanaged. We've had a management team on that's been managing it, and they didn't really care about it, and the seller didn't really care about it, and so they just kind of let it go. So we're going to go in and we're going to fix the management on it, and really, because the expenses got too high, no one was managing the expenses, and we're going to decrease those expenses. That can add a lot of value to a property. Sometimes the business plan is, well, we're buying a brand new building that's just finishing its construction, and then we're going to go in and lease it up. And that's how we're going to make money on this property. So the business plans can vary widely in what's going to happen. So you really want to understand the business plan for each investment that you're investing in. Okay, this is a good one. Number 9, what will I find when I run your background check? So you always have the opportunity to run a background check on anybody that you want. You can do those online. It's not very hard to do. And you may want to run a background check on the sponsorship team just to make sure that you feel comfortable with what's in their background. But sometimes if you just ask them straight up, like, what will I find when I run your background check? They can tell you, right? And really, it's not to penalize people for past mistakes, right? We all make mistakes in our life. And sometimes if you made a mistake in your 20s and now you're in your 40s and you've recovered from that and you're doing well, but it's just a test of openness and honesty and transparency. It was funny because I had someone tell me that they ran a background check on me, and I was like, oh, well, what did you find? Did you find anything? Thankfully, they didn't find anything because I don't think I have anything that would be on there. But yeah, it's a good idea to do that. Okay, number 10, have you ever been a passive investor? Now, as a passive investor myself, so I invested passively into syndications before I ever decided to go and be an active investor. And I feel like that's helped me a lot in a couple of ways, right? So number one, it makes my money work hard for me, right? And I get the benefits of passive income. And number two, it also helps me to understand from a passive investor perspective how you're thinking about deals and how you're thinking about the people who are running the deals and what goals are and things like that. And so you can ask them about if they've ever been a passive investor. Most lead sponsors I know have been. They also invest passively into, we kind of invest into each other's deals, and really just make our own money work hard for us too. Number 11, what's your ultimate goal with syndications? You kind of want to see, well, what's your end game? Where are you headed as a real estate syndicator or lead sponsor, and to really understand kind of their trajectory in what they're doing. And 12 is a really good one. Tell me about a time when a project did not go according to plan. And again, if anybody says, oh, all my projects were fine, that I never had any trouble in real estate, then you need to run and run quickly, because all of us real estate investors have had projects that did not go according to plan. In fact, I think every single project we do doesn't go all the way according to plan. There are pivots, there are changes, we have to make it. And that's what's so fun, I think, about being a real estate investor, is that you get the opportunity to solve challenges as they come, and they're going to come, right? And so you want to understand from a sponsor, when the projects did not go according to plan and what they did about it. And that's the most important thing. It's not just, oh, well, we lost a whole bunch of money. It's, well, how did you fix it? And how did you make it right for your investors to make sure that they didn't lose money as well? So those are my top 12 questions, but I do have a freebie that I can give out to you it's more in depth. And so it's the top questions to ask a sponsor. It's like a checklist that you can use for any time that you're looking at a new real estate syndication. And if you're watching this on YouTube, we will post that link down in the notes below. So if you're ready to learn more, feel free to sign up for my newsletter. I share insightful tips to help you succeed in real estate. I also have a free course called Passive Investing Made Easy. I know that sometimes real estate investing feels overwhelming, but really passive investing is a fantastic place to start. And then I also have a whole bunch of real estate investing toolkits that you can grab. So now we're going to move into the Q&A portion. Okay, so one question that came in was, do I need to vet every member of the sponsor team? Well, that's a great question. So sometimes a sponsor team can be huge. Sometimes there can be 10 people on the general partnership team. And so, do you need to vet every single member? Do you need to run a background check on every single member? Well, I think it kind of depends on your own comfort level. If you feel like you need to run a background check on every single member of the team, go for it, right? To help you to feel comfortable to invest. I said previously, though, that sometimes you're brought into a deal because you know one member of the team and you don't know the rest of the team. So one of the great things to do is to join the webinars that they have for the investments, and the webinars can help you to get to know the full team a little bit better. And you can join it live and ask your questions and really see how they answer the questions, so you can get to know that team. But do you have to vet every member of the team? No, it just depends on your own comfort level. So again, if you have any questions, post them in the chat, and then I'm going to answer it. Okay, we have another question that says, what roles are crucial to the team? Well, a sponsorship team, that typically there's four main roles. So the first role is called the acquisitions specialist. An acquisition specialist is the one who's out there trying to find the deals. They're out there looking for talking to the brokers, they're talking to owners, and they're trying to find the deal and find a good one, right, for us all to invest in together. The second role is called the underwriter, and underwriting is just a fancy term for a financial analysis. It's the person who loves the spreadsheets, and the person who dives into spreadsheets, and they do these analyses, very in-depth analyses on the properties to make sure that there are good properties. The third member of the team is called the capital raiser, and the capital raiser is the one who's out there educating investors and helping investors find these types of opportunities to invest in. So that's exactly what we do at Steady Stream Investments. One of our roles on the team is to be the capital educator. And then the fourth role is asset manager. And the asset manager is the one who kind of takes over after the property has been closed, and they're the ones who manage the property managers, because we always have a professional property management on our properties. And so they are the ones who go out and they actually manage the property managers and execute the business plan and make sure that the renovations get complete and things like that. And that's another role that I take on as a member of the general team. So those are the roles that are crucial to the team. And then of course, the fifth one is the passive investors. You are crucial to the team, because there's no way that we could all invest in this group project together without passive investors. So you are also crucial to the team. Thank you for that question. Okay, next question. If the sponsor you're dealing with is on their first deal, what would give you confidence to invest with them? That is a great question. So, I always like to give people chances. We want people to give them chances and give them a chance to really learn and grow and develop. And so some of the things I think that would make me feel comfortable investing as a passive investor with someone who's on their first deal is are they partnering with other people who have a track record already, right? Are the other people on the team experienced? Because a new person needs to work with experienced people. So that's number one. And then number two, I would want to know is, the person who is new, do they have any experience in real estate at all? So as for me as a passive investor, I would want to see someone who has experience in real estate investing, whether that be in single family or small multis or Airbnbs or something, so they at least understand the industry and know how to talk the talk and walk the walk. So those are two things that I would look for if you're working with someone who's on their first deal. Okay, another question. Is it bad if a sponsor is not full-time, right? So is that a bad thing? Should a sponsor be full-time? Well, let's think about this for a minute. So if we go back to our pilot analogy, the pilot, who's also the lead sponsor, who's equivalent to the lead sponsor in a deal, I want them to be experts at what they do, right? I want them to fly, and that's all they do is they fly and they fly and they fly all day long to make sure that I'm going to be safe on the plane. Now, What about a flight attendant, right? One of the co-sponsors. So if a co-sponsor as a flight attendant, what if they have a side gig, right? And so they are a flight attendant, so they work in real estate on a little bit, but then they also have something else that they do. Is that okay? Yeah, I think that's okay as a passive investor. That wouldn't bother me at all. I want to make sure that there's at least a couple members of the team who are the experts who are going to be working day in and day out on the deals. But if there's some members of the team who are not full time in it, that wouldn't bother me at all. Okay. So, I got one more question that came in. So we'll do this last question and then we'll end. So it says, how do you like to perform due diligence, and what can you use beyond Google, right? Um, do you just vet their past investors? So as a passive investor, your due diligence is just the term for figuring out and if this is a good property for you, and if it's a good market for you, and if you like the team. It's like vetting the sponsorship team, vetting the deal, and vetting the market. So what can you use beyond Google? I know Google's a great one to like dive into the markets and dive into people, but one of the things that I like to do is I like to network. There are lots of real estate meetups out there. So even as a passive investor, you can go to these meetups and you can start asking around about who's a great sponsor in this certain market. Maybe you have a market that you are excited about, that you love, or it's the one you grew up in, or it's the one where you went to college, or things like that. And you can start asking around to vet the sponsors as well. You can also ask for references. So you can ask a sponsor, do you have, an investor that has invested with you that would be willing to be a reference? Now, some might, and some may not, because passive investors aren't always, they don't always like to be known that they are investing passively. Sometimes they're a lot more private about their investments, but you can for sure ask if they have anybody that would be willing to be a reference for them. And so those are some of the things that you can do is go to meetups, get to know other people, and start asking around. If there's a sponsor you're interested in, you can ask people, have you ever invested with this person? Or, do you know much about this person? And really try to get their other people's perspectives too. All right. Well, thank you so much for everyone for joining. If you're on YouTube, please like and subscribe to the channel so you can feel free to get more information. Again, Steady Stream Investments is all about educating you on passively investing, and I'm excited to help you go on your journey. Thanks so much.